Welcome to the first ever Prestige Private Finance podcast, Mortgages Made Easy. I'm here with David Jackson, our founder and managing director, here to ask just a few questions about the mortgage world, get to know David a bit and get to know Prestige Private Finance. Tell us a bit about yourself. How did you get into the wonderful world of mortgages?
Entered the world of mortgages in 2002. Prior to that, bizarrely, I did a degree in civil engineering at Leeds University. So went into civil engineering, worked for Balfour Beatty after graduating from Leeds. Really wasn't into it. Came out of Leeds, and next thing I was on a building site in the middle of the city. After about 6 months, decided it wasn't for me, and made the brave decision to go travelling around the world. So off I went, backpack on, spent about 16 months away from home, travelled all through the Pacific, arrived in Australia, and had a year's working holiday visa in Australia, which I needed a job. And like a lot of backpackers in Sydney, took on door-to-door sales as my backpacking job. So weirdly, I always say that was probably the big eye-opener in my life. 9 months of knocking on doors in sometimes 40-degree heat, getting told to jog on by a load of Australians to speak Australian because my British accent was a bit too harsh for them, was definitely character building. But what it did teach me was the ability to get people in conversation. You know, that was the art to the job, really. It was before they slammed the door in your face, was actually to engage them. And then once you actually got them in conversation, you could then steer them to actually having a chat to why you were there. And why I was there was to switch the telephone. Back in the day when you had landlines, Australia's version of BT is Telstra out there, and there was a company called AAPT Smart Chat. So if there are any Australians that remember those days, I was the guy knocking the door trying to switch you from Telstra to AAPT, which ultimately I actually became quite good at by the end of the 9 months. To start with, it was 100% commission, so you could work a long old day and not actually get paid for it. So there was a bit of an incentive to get these people talking and get the sale done on the day. So, but what it did teach me was the art of sales. So when I did arrive back in the UK, it was like, right, what do I do now? Hitting 24, you know, a lot of my friends had got their careers underway, having graduated, and I was back to square one in some ways. So I applied to a job to a very well-known estate agency in London who were recruiting heavily for graduates. Got a job with them, spent a year bundling around some different roles, and then encountered their mortgage side of things. And at the time, it was very much a self-employed model, where the guys were selling endowments, but that was at the back end of all the mortgage brokers selling endowments. So back then, mortgage brokers didn't actually get paid that much for selling a mortgage. They got paid a little bit. They were all incentivized to sell endowments, probably why the whole endowment thing happened. Yeah. But the company was coming out of that phase and actually going for a transformation, and actually started to look at how they're going to move forward. And I actually became the first guy they trained up who had no experience. I was the guinea pig, and then to this day they're still bringing people through this trail I blazed back then, I suppose. So
you were the guinea pig for it all then, weren't you? So you're the reason to blame for all the mortgage brokers.
There's a lot of people that did actually follow after me through that company, and a lot of well-known people who have gone on to do really well. But it's the fortunate timing. The industry fitted me well because I'd learnt the sales side of things for Australia, but I had the numeracy behind me with through doing engineering, which is analytical, numbers and problem solving. So between them, actually, the financial services world fit me quite nicely because it's a people job. It is actually ultimately a sales job, selling your service, selling your ideas, but pitching your ideas which you found a solution to someone's requirements. So the problem solving there, the sales side is there, and I was able to excel in it. So
would you say that the door-to-door knocking in Australia, I mean, that's pretty intimidating stuff, and people, I mean, even these days don't really sort of find it as a very glamorous way to do sales. Would you say that was a pivotal way for you to learn how to do just the selling side of that?
Every day, that dreaded first knock on the door, and then the first time someone actually opened the door, the adrenaline every day, it was just quite uncomfortable. Not many days that I get up and go, right, I'm looking forward to that first conversation, that first knock on the door. I used to have calluses on my knuckles from the amount of door knocking I did. So, and then they'll get you conditioned, do some practicing, practice pitches, share best practice. So they actually did quite a lot of stuff that to this day was actually still very useful to have seen, and the prep that goes involved to preparing yourself to speaking to people. So, and then what would generally happen, you have lunch, get on a train out to somewhere West Sydney, and then all of a sudden there's your patch on a bit of a map. There you go. There's probably about 50 houses to work your way around from 2 o'clock in the afternoon to 8 o'clock in the evening. Obviously people won't be coming back, so you just keep on circulating an area till you've tried to speak to most people. And if you could get 7 sales a day, that was a sort of like the marker. You get to ring the bell when you get back, and then if you did 10 sales, you get to hit the gong. So it was all that sort of, and then happy clapping and stuff like that. Yeah. But obviously the more comfortable you became with speaking to people, engaging in different conversations, working on different ways to actually get someone. Not many times would you get someone actually answer the door. They go, oh yeah, I've been waiting for you to come in. Oh,
so nice to see you,
yeah. 98% of people tell you no.
Back then it was the approach. I mean, obviously nowadays you've got so many different ways of communicating with people. But back then it was, I can imagine it was either you pick up the landline or, as you said, you just go door knocking. And that was really sort of the only way to get hold of people. The
advantage, I never did any sort of cold calling over the phone. So the advantage actually doing it face to face is eyeball. It's just stand there. My mentor, a guy called Mark Stewart, shout out to him. I put a lot of credit in actually developing that side of me that during that 9 months. Taught me the art. He's a big guy, knocking the door, and he just stand there, eyes open and smiling at someone. and then someone come to the door and they'll just go, what's going on?
Really, isn't it?
And guess what? The nervous of the person, they just start smiling back at you.
Smiling back, yeah.
And they go, hi, how you doing? Yeah. And then silence, and then he'll engage them in conversations. So it was quite interesting to see how to sort of have a conversation and actually get someone, because ultimately if they need the product, they'll have it, but once they're willing to listen and actually explain it and stuff like that, they're either going to take it the way. But majority of the time it's, well, this company's trying to steal it off there, and the only way to go to get you is undercut Telstra. Telstra's prices up here, these are down here. I'm not going to change anything. So it sort of made sense. But the art of the conversation was key. So some really good building blocks, which then I was able to then translate into what became my profession a few years later.
What's one piece of advice that you would give your younger self, having been in this world now for very, very long time?
Just worked a little bit harder to have been number one. Look, I'm actually quite fortunate if I retrospectively look back and how the career I've had in the industry. So you had the ups and downs trying to get through the credit crunches. A lot of the things the ups and downs, actually some of it was outside of our control. Even our sales director during the middle of the credit crunch was saying, it's your fault, and don't blame the market, and going, well, it's a credit crunch. How could I not blame the market? There's only so much things you could do. So I got, some of the, I guess in the 20s, you're a bit younger, a bit more rawer, not get involved in some of the politics, just get your head down and actually just be the best person you can be. Yep. And actually, even the environment we're in, very salesy environment, just be a bit more humble. That's probably my key thing. I was probably, look at me, I'm great at this job sort of thing. And I probably should have been a bit more humble back then. That's fair enough. Yeah, that's probably my
be more humble. That's quite unique.
There you go.
So talk me through the process of, you went from working at such a big agency where you used to work and going through that sort of mortgage world, and then all of a sudden something obviously happened along the way, and then you've gone and you've made the decision to go, I'm going to go set up my own thing. Talk me through the process of just your mindset of thinking, I'm going from this really comfortable position that you were probably in at the time, being fed business and being, quite comfortable, to then sort of going away from it and being more sort of uncomfortable, and just sort of going through that process. What was the thought process? What was the experience like for people that might think about doing the same in whatever industry they're in, of being comfortable in a big environment to sort of then just being on your own?
Well, the dial changes. I was a lifer back in the noughties. I was, cut me, I bled blue. loved it. I was good at it. And then the industry changed. The person that ultimately owned the company moved on, and actually I was very favoured because of the system I came through. Because I was the first one there, I probably did get a few perks, got given the Sloane Square office when it opened. Thus, I've made some great contacts out of there. But when he sold the estate agency, changes started happening, and the credit crunch came in. And with the credit crunch, the mortgage industry was on its knees. We didn't have product transfers back then. The SVRs were cheaper than the fixed rates. Lenders were only lending at 65% loan to value, and even then they didn't really have the money to lend. So the industry was on its knees. So then what happened? We had a big city office that got shut down. My sales director got made redundant. My area manager got made redundant, and I got put in a different team, and we got put on life support. And then the influencers outside the company came in, and it's like a new football manager coming in, isn't it? They want their team in. They want the people that say yes to them. Whereas my team had moved on, and I was an older head, so it just became a different world. And the company had to change anyway. Coming out of the credit crunch years, I don't know the precise detail, but obviously it got a bit of heat from the FCA and stuff like that. We went from having a 6-page fact find to having a 20-page fact find.
Right, okay.
Overnight, all our files passed, and the next day, all our files failing, and created a really bad atmosphere for a period of time as they went through the transformation. So it just became not the ship I was used to, thriving in, doing well in. It became a bit of resilience to get through those times. In hindsight, it still did me one. There was still loyalty there towards me. I got through those times, and then the usual thing. Yeah, someone else, the manager came in. It wasn't one of the team, and it's just like, right, this could be the sign to get chest out and go and check out the world. I hear there is a world outside of this bubble somewhere. I get told if you go out there, you'll fail. That's where those sort of companies work. And even the door knocking company, they had the same sort of thing. It's like, you'll never succeed if you leave here. How to scare you into staying. So it was just it was a natural time to do it. Obviously, like any sort of major player, when you first leave, you leave a bit of resentment. Like, I should have been. At one stage, I was the heir apparent to be the sales director and stuff like that. But then that shit went. So I left there feeling a little bit unfulfilled and a little bit unfairly treated. I hit my glass ceiling. I was managing a team at Park Lane, which was great, but I knew I wasn't going any further. So, and I always felt year on year, some way, shape, or form, I was progressing. Whether it be getting to the top of the board as a sales advisor, being running a team of South Ken, running a team of Sloane Square, running a team of Park Lane. There was always felt like progression, but at the back end of it, it was quite clear that I wasn't going any further. So it's either you sit there and comfortable and get squeezed out, or be the bigger man and try and leave in the right way.
So then starting up Prestige and moving into the world of creating your own company, was that? I mean, obviously initially I imagine it was quite intimidating. But then obviously you've just celebrated your 10-year anniversary of starting the company. I mean, looking back, you must be incredibly proud of where you started from to where the company is and you individually are now.
Yeah, I mean, I had a bit of a soft landing. I did go and work with some guys that used to be at the old company for about 6 months, but literally within 2 weeks of working there, it was blatantly obvious I could be doing it myself. So obviously I agreed to be with them for a while, and I thought I might give it a year, and I could only do it 6 months before I was bursting at the seams to actually crack on with what I always, I was always a bit worried about doing it, but once you sort of done the hard thing of breaking up with your love of 12 years, it was a bit like, okay, well, fine. We've done the hard bit, now let's crack on with life. So, but the difference of being 1 minute sat in Park Lane looking over all the Ferraris flying around and running a team there, and having the sort of kudos of that, to then 6 months later being sat in your spare bedroom looking at a wall, printer's not working and not knowing how to fix a printer. It was a bit like, okay,
what have I done?
But cream rises to the top, and over time you just have to give it time, do the right things, believe in yourself, And all the good things that I learned over the years, all the good habits I developed, it was just keeping those habits and then taking them to the next level.
Yeah.
You know, not thinking that just because you've set up a company, gone self-employed, that you can just run off and play golf all day. It's actually, no, let's get back to working 8 till 6, working harder,
Probably,
working
yeah,
weekends.
you probably found yourself in a position where you have to work harder because you don't have that safety blanket. You don't have that, as you like to always call it, the bubble that you're in. You kind of get protected from outside things. It's now you're sort of exposed to the world, and you've got no choice but to step up and work even harder.
Well, that's it. So, yeah, and then it's just not letting anything. It's just get anything back. But what you do then find is your attention to detail goes higher. Every client is more important. It's your name on the door. Whereas obviously, again, when you're in a bigger organisation where, yes, there could be more volume of conversations and stuff, but they're putting pressure on you to deliver the figures. Guess what? You get a bit loose, don't you? Because they're putting so much emphasis on how many sign-ups, what you're selling and stuff like that. So, and clients do get annoyed because you're taking on too much volume. And I guess then when I was actually managing a team and I was expected to do that, you know, things would, little things would go wrong here and there, not massive, but actually stuff that I would feel that I've let someone down. I said I'll call somebody and I wasn't able to because I got pulled away because of a disciplinary issue or whatever, or one the team needed me or something's going on. You know. Yeah, so in those early days, it was just getting back to basics and actually then building the foundations that 10 years later you go, oh, right, okay, sort of actually went on a bit of a journey there. But when you're immersed in it, you don't sort of appreciate it at the moment. So, I've got to be proud after 10 years.
What are you most proud of?
The team. I mean, you know, we all have our, we have our weird ways, our little quirks. But you know, the reason I'm not a one-man band is because I'd get bored senseless. I like the job and I like looking after my clients, but if I was doing it on my own, I just probably wouldn't have the bit between my teeth. And you know, at a lower level, we still have competition. We still look at the boards and stuff like that. So, and having that sort of still keeps that fire going. And at the same time, trying to create an environment where people can succeed and give it, I want everybody to have the opportunity to do what I've done and create a lifestyle that I've created from it, while at the same time showing it can be done. So, yeah, the team's been amazing. Just recently, Emma's been doing a lot of stuff with the branding, actually creating a bit more of a serious sort of a look rather than just being bunch of mortgage brokers that look after an estate agent and live off that and don't need to worry about
a bit more identity.
Exactly, that's what we're doing this today even. So it's so actually adding a bit of fun, adding a bit more identity to it, which creates a different sort of dynamic and a bit more legitimacy, even though I know for a fact we're the best bunch of mortgage brokers in the industry. Sometimes you've got to shout about it, as much as I hate the world of LinkedIn and some of the noise that goes on there, a load of nonsense. Oh, look at me, I've done this. Really, actually, let's see your figures. I actually want to be able to stand toe to toe and go, here are my figures, this is who we are. We're the best for a bloody good reason. Yeah,
fair enough. Obviously, along the whole process and the whole journey that you've been on, obviously it's not all sunshine and rainbows. There are some dark days and some bad days as well. But what's one of the, I mean, if you can share, if you don't mind sharing, what's one of the biggest mistakes that you've made, that you've learned from, and that 10 years on with your own company that you've sort of made the biggest sort of adjustments with?
Got to be careful what I say, because I don't want to sound this wrong way, but obviously when we had our relationship, I went for some transformations and there were a couple of warning signs that I should have diversified a bit more, but I had complete loyalty, and it just meant when they went through a big transformation, we weren't able to be as nimble as what we should have been to get around it. Yeah. So harsh lesson learned is that we had to make sure we covered all bases. And in reality, we're actually, because we've got such a strong team, the guys were actually resilient still and went about the job. But it was that awkward time where I couldn't just switch the tap on in 2 seconds. Action had to be taken, but action wasn't going to happen overnight. No. It took 6 months for us to sort of start getting a lead source flowing through. And lucky enough, we had resilient, good brokers with enough client bank in the tank and enough stuff going on they were able to get through that sort of blip while we were able to get back on track again by attracting wider business. So, but like with anything in life, anything in business, you've got to learn from. I don't think it's a mistake. It was a lesson, but I still don't feel it was a mistake. I still think we were doing the right thing. It was just factors outside our control.
Yeah.
But I think back to the credit crunch days, it was outside our control. The only way you could get through those days was work 3 times harder to get an okay result. And then when there has been sort of blips in the market, changes, sometimes you just got to fire on through. I mean, COVID, my attitude when that happened was just hit that phone until everybody on the list is called, everybody's on top of it. And realistically, I know myself during that COVID period, that original lockdown when the property industry was shut, I think I only had 2 days where I couldn't do anything. So I kept it bloody going long enough to only give myself a 2-day break when most people had about 6 months off work, So, so lessons learned are be adaptable, make sure, but also not to actually, no, you do panic, but you just panic in the right way.
Yeah.
You channel your energy to get through the blips and things that are going to be outside your control. Because again, the next issue we'll have, we don't know what it's going to be.
No.
If you can predict it, we'll all know exactly. But it's dealing with it as and when it's
dealing
happens.
with it appropriately at the time, and
don't shy away from it.
Yeah.
Sometimes you just got to stand up and be counted and go, right, okay, let's have a go. If you hide away from it, well, you're going to get swallowed up.
Yeah, 100%. So moving on to sort of dealing with clients that you've sort of dealt with, and clients that we all deal with on a daily basis. What's the one piece of advice that you would give any first-time buyer out there at the moment?
Speak to one of the team. Get your ducks in line. Get mortgage ready / property ready. Do your research. Make sure you're speaking to the right people. So from a mortgage perspective, recommendations and reviews and stuff like that, make sure you're speaking to a proper individual, not a conveyor belt. There's companies out there that say they'll do it for free and blah blah, and if somebody's going to give you the advice and then pass you and say, well, we've got 12 case managers, red flag. That means someone's not going to look after you throughout the journey.
You're just another number, you're not a name.
Exactly. So make sure you've got the best people around you. Okay, obviously finding the right location, you need to understand where you're going to buy, because that's a key thing. It's where you're going to live. So do your research there, understand what your budget is and how you're going to be mortgage ready. So from speaking to our guys, they'll prepare you to understand your budget, what you need to do, deposit, bank statements, credit, what's the income, what's your situation, and make sure you're given the initial guidance so you know what you're up to. And I'm sure because rates, criteria, so many moving parts all the time, and we can only lock it in at the point of application. It's then just having that 2-way conversation to make sure that whether it be 2 days, 2 weeks, 2 months, 2 years, we are guiding you through the process. So it's being mortgage ready, being property ready, and making sure you do take the right guidance from the right people who will look after you through the process, because it's key.
Fair enough. So say, for example, you've got a client that gives you a call. They took out a 5-year fixed rate mortgage and it's coming up for renewal in the next 12 months. 5 years ago, the rates were, as you know, a lot cheaper than they are today. I
looked at one today at 1.45%.
There you go. So prime example, you've got a mortgage that's coming up. They're coming off that 5-year fixed rate. It's coming up for renewal in the next 12 months. They're panicking about their payments increasing.
Yep.
What can they do to manage it? What can you do to help them manage it?
First off, I'd say shut out the noise for another 6 months. Enjoy it. Because there's nothing you could do about it at the minute. Yes, you need to obviously give them a little bit of advice, but try and calm them down. Just say, look, seriously, you're in a great situation. You've saved so much money over the last 3 years. Be happy about it. And actually don't put the stress on you for a while. Enjoy the fact you've got it, But however, obviously, the example today, I've got one ending on the 31st of December at 1.45%, and he's happy, understands it. And I'm like, to be honest, let's chat about it in August, September, just not worry about it. But today, these are the interest rates. So yes, prepare for it, but also don't panic about it. It's a hard fact what's going to happen. There's an end date. It needs to be addressed. But, if you're coming off a 2-year fix from 2 years ago, what, 4.5%, 5%, nothing you could do anyway for
No.
till you get within the 6-month window. But make sure we're speaking to you at the 6-month point to where we can actually start reserving
And
rates.
that's the key time, isn't it? 6 months before the end date.
Yeah,
Because I think some people try to leave it a bit too late and a bit too last
I do
minute.
find some people wait till 3 or 4 months. I mean, obviously you've got the renewal with the potential with the current lender. You know, naughtily, a lot of lenders are moving away from offering rates 6 months in advance, but yet they'll offer you a rate from a remortgage. But that's just because they're being a little bit precious about the processing.
Yeah.
People switching rates, what have you. I don't think that's a great thing. You know, if you're offering someone a remortgage 6 months in advance or a purchase rate 6 months in advance, what's the difference with a internal rate switch?
Yeah.
You know. But anyway, that's for them to work out. All the lenders seem to have ignored the government charter and they've gone down that path.
Yeah.
But you want to be able to obviously analyse what the current lender's going to offer versus what the open market's going to offer, and also are there any changes with the client? Do they need to borrow more? Do they want to make any changes that do actually mean a rework of the mortgage is necessary, or is it just a like for like renewal? And if you're with a lender that generally offers good deals for existing clients, well, why would you go down the bother of making moves to switch lender unless the market moves in a different direction? So
Yeah.
then the art of it really is just trying to keep an eye abreast of which clients are on your radar.
Yeah.
to be reviewed. And if the market, as we've seen before a couple of times over the last couple of years with the summer of 2023 and obviously the mini budget where rates went up to the sixes,
Yeah.
you know, we had probably 2 or 3 days within which to actually reserve rates. So get that done at that stage to make sure that you've got rate certainty.
And that's the key thing, isn't it? Because I think a lot of people they go towards the end of the initial fixed rate and they think, well, I can just do it online, or I can do it with the lender myself. But you're then completely cutting yourself out. That if there are things that do change in the market,
Yep.
for better or for worse, you want to be speaking with us to be up to date and know exactly what's going on.
Even on a purchase, remortgage or whatever, you know, someone, I don't think the misconception's out there so much like it used to be, you know, doing the job in the noughties where, oh, it's obviously going to be a lot easier for the bank will look after me. No, not really.
Yeah.
I mean, now that the high street's gone and banks do actually prefer the people to come through the broker route. But the difference, if they do try and do it themselves, yes, they'll get a rate, but the bank isn't going to let them know of any adjustments to it.
Exactly.
So, you know, and do they have the time and the energy to chase it? No. So just you speak to your broker. Obviously, we'll make sure you're looked after. And again, us against some of the online people where they won't do that either. They don't want to process your
They'll
rate
lock something
again.
in, it will offer, and then it's like, right, that's it, done.
Exactly. So that's where the USPs of how we're set up and the actual individuality actually comes into its own, because we do look after the client and make sure they are getting the best rate. So yeah, there's different ways to skin it, and because of that time period, there's generally a strong chance you would readjust the rate during that period of time anyway. And obviously, you want to be doing the best thing for the client.
Yeah, exactly. And buy-to-let mortgages. This has been quite a hot topic, I think, for the last couple of years, because I think a lot of landlords are falling into that category, like we spoke about before, of locking in 5-year fixes, and then their rates are coming up and they haven't had to do anything for 5 years. And now that buy-to-let market has seen such a big shift in what they're going to be paying in terms of mortgages.
Yep.
How, like for you, how do you think the buy-to-let market's been affected over the last sort of 2 or 3 years, really?
Well, 2 or 3 years. I mean, on a purchase basis, obviously the stamp duty thing isn't going to help. But when the original 3% came in London, obviously we're quite London-centric.
Yeah.
That sort of pushed that market out, and then the PRA's rules came in place, and you know the different changes in taxation meant that buy-to-let purchase in London, you know, I don't know what the stats are, but just from a gut feel, aren't that much.
Yeah.
You'll tend to get people doing let to buys where theoretically a bit of an accidental landlord, or they just keep the place they bought, so it's not accidental, but they're happy to have 1, maybe 2 properties. So that's how multiple ownerships tend to happen rather than actually buying a buy-to-let. So the things aren't getting, well, things actually just recently are probably getting a bit easier just because the interest rates have been going down. But when interest rates were going up, inflation was high, some of these calculations were mental.
Yeah.
It's like, you're not going to do any business.
No. Well, a lot of landlords, their only choice was to stay with the same lender. And it was almost like they had no choice. And then because it's, you know, their payments were in some instances tripling.
Well, look, during the credit crunch, all the buy-to-let lenders got pushed out of the market till literally there were 2 left at one stage. So there were a lot of landlords that were caught. They were quite fortunate. Majority were fortunate because, like I said earlier, the SVRs came down low, so they were actually okay. But those that were stuck with like the Mortgage Expresses of the world, and who ended up being government owned, ended up being stuck there at high prices and not being able to remortgage away for years.
Yeah.
So there's been examples of these things happening. So it's where being lowly geared and being adaptable is key. But you've got to have the money to be able to do that in the first place. So.
Do you think a lot of landlords are feeling the pressure in the sense that they feel that they have no option but to sell their properties, which is why they're just getting out?
Who just say they're not making any money anymore. They're losing money because they're getting taxed on things, especially if they're a higher rate taxpayer. The days of actually making a nice income from it, in the short term anyway, aren't there. You've got to take a long-term view that you're going to get a capital appreciation, and over time value goes up, rentals go up, and at some point it'll be a tipping point that becomes your pension and you get rid of it. So I mean, not get rid of it, you get rid of the mortgage, you pay it down. So it's a different feel. But gone are the days of in the 90s when the buy-to-let market opened up, and then the noughties where it became quite big. A lot of people did really well in the previous decade as these rules came into place. Not so much. And then I don't know what the hell the government thinking of this 5% thing, because that's just going to kill that market. So new landlords coming into the market, with home ownership and stuff like that, just isn't going to be there.
No.
Or actually newer anyway.
Yeah.
We're not, especially when the values are quite high. So different pockets around the country will have different dynamics, and 5% on a 100 grand property up north versus 5% on a £1 million property in London is a big difference.
Yeah, no, big difference. Do you think that's why a lot of people who are looking to go into the buy-to-let market these days are looking to do it through a limited company as opposed to in their private name?
Yeah. Well, obviously, because you can, not obviously, but obviously I'm not a tax advisor, but you can offset the corporate tax against it. But the problem then is, obviously, as we know, the lenders that will lend to those structures charge you more, charge you higher arrangement fees, charge you valuations fees.
Yeah.
So where you're saving on one, you're paying on the other. It probably will work out better. I can't guarantee it.
Yeah.
The only danger I would say is obviously fiscal policy could change at any time.
Yeah.
And the government could say, actually, that's another area we're going to dip into now. We're going to start taking a bit more on these SPVs people have created.
Yeah.
And that's how things could change.
Yeah.
So it might be right, but today it could be, tomorrow it could be different.
It's a bit of a snowball effect, because you look at it as the government's obviously bringing all these things in for, to taxing landlords and stuff to try and help first-time buyers get onto the market. But ultimately what it's doing is it's making landlords sell their properties, which is then having less stock available on the rental market, which is then forcing the rental prices up, and then people can't save as much for deposits, and it's like, well, I don't know what I'm going to do. So it's kind of a catch-22 that I understand to a certain degree why they're doing it, because they want to try and make more properties available for buyers to get onto the market. But if they're reducing the stock on lettings, it's just going to force the prices up and make it unaffordable for renters.
I mean, the classic saying is that everyone likes tax as long as they don't have to pay it. It's another envy's type of tax, isn't it? It's just an easy way, but I think the 3% was palatable. Probably made sense in hindsight. Some of the, obviously during the COVID years, I'm sure you remember a lot of people buying in Cornwall and stuff like that.
Yeah.
So obviously discourages the second time buyer unless you really, really want to, or second home buyer, unless you really want to. But, look, there's stamp duty around the world a lot more in other places. Yeah. It just feels a bit excessive, having been in the industry for how long.
No, fair enough. So looking in I know you don't have a crystal ball, so I'm not going to ask you to predict too much. But obviously, the mortgage industry has obviously changed so much since you first came into it, and obviously it's evolving even on a daily basis that we see. What do you see? What trends do you see sort of shaping the future of our industry and the property industry as a whole? Really.
Obviously, a key
bit of a loaded question.
AI is the thing. I do think people get a little bit over obsessed with it, as opposed to actually understanding it's still a people job. People buy off people, and especially you've got so many moving parts, not just the client situation, but also the property as well. There's so many different things with property, and again, leaseholds in London and stuff like that.
Yeah.
You can't get true automation without actually knowing the individual things. So they'll make it easier, make it a bit more slicker. great. They could probably write letters a bit quicker. Yes, there'll be some people marketing CRMs, and as we know, a CRM is only as good as the person using it.
That's very, very true.
So unless people embrace the technology that's there, things don't get utilised to the full degree.
Yeah.
In our industry, we have sourcing systems, and some of these sourcing systems could do a lot. Really, majority of people just use it to look for a 2-year fix or whatever. It's that basic. So, so there'll be some people, spouting out that AI is going to change the world, and there will be some modifications where it will improve stuff, but also there'll be a balance between where the human sits versus the benefit of it.
Yeah.
And the reality is, what's on the high street nowadays? Obviously, a lot of barbers,
American sweet shops as well. They're popping up everywhere.
But ultimately, things that you can't do online.
Yeah.
You've got to live somewhere. The actual physical property, and it's too large of a transaction for it to be completely automated. It's not like just getting a credit card and £1,000 here and there. The transactions are too big to be not looked at properly.
Yeah.
And yes, you'll get lenders that will try and do things quicker. We obviously went to a major lender yesterday who at the minute could get a mortgage offer at 1.5% of their applications go to mortgage offer in 1 day, didn't they say?
1 day.
And their goal is to get up to 50%. Well, the only way to get up there is that you've got to rely heavily on automation.
Yeah.
Well, or so if they've got these plans, but guess what happens? It takes one thing to go wrong, and they backtrack
right
at it.
Back to the start. Yeah.
So it's getting comfortable. Things will be a little bit like that, but the days of you could actually get 1-minute mortgages in the noughties. There was a company called Adeus that at one stage buy to let. It's doing automated valuations, 85% loan to value on buy to lets, and actually mortgage offers in within 24 hours. So technology's always been there to a certain degree. It's actually switching it on, and the bank's been comfortable enough to be able to do it. And guess what? Most of them won't be.
Yeah, fair enough. Sort of last sort of couple of questions from me then. I mean, what would you say is the biggest myth about our industry and the mortgage world out there?
It's all about the best rate. I could do your job because it's easy. Well, there's a reason we exist. Yeah. It's because everything is different. Every individual we speak to is different. Yeah. Been around a bit, and very rarely do you ever get a client that's very easy, bish bash bosh, and they could have done that in 2 seconds. Everybody either has some quirks. You'll get rich people with stupid car loans and Ferraris and stuff that are blowing up their affordability. Yeah. You get someone, lazy, just forgot a credit card payment, stuff like that. It's just weird. And then when it is straightforward, the valuation declines because of some reason, like the EWS1 forms and stuff like that being below 18 meters. So there's always something there that makes it different, put it that way. So
what's next for Prestige? What do you see sort of on the horizon? Any exciting developments that you see coming?
For Prestige, it's just growing us as a brand. A few years back, like I said, we were a bunch of very good mortgage brokers, 5-star reviews. Check us out on Google and Trustpilot. But it's more the presence behind us, making sure we're shouting about it a lot more, getting our marketing right. Thus, we're doing this today, actually, letting people see underneath the bonnet of who we are, what we are, and making us more well known that we're there to help and service more clients at the level we believe we do. Obviously, we've got our financial well-being campaigns. Speaking to people about preparing them for home ownership. So looking at things in a different way rather than just being your bread and butter mortgage broker that deals with an estate agent and stuff like that, which is who we are, where we've come from. But it's just widening the net and thinking about different ways in which we can actually help the client succeed with their home ownership goals. So, but the guys are doing really well. We've got some really good initiatives, and just want to continue, have some fun on the way, and create a good team, and keep that 5-star reviews going.
Nice, perfect.